Well, good morning, traders, or good afternoon, depending on where you're calling in from. I'm calling in from Olympia, Washington, just south of Seattle. And it's kind of a rainy day here, so it's a good day to just be sitting in the office and scanning for some great trades. But we got lots of folks still logging in, so why don't you type in where you're calling from? It's always fun to see just what location people are at. See, I got Brad here. Brad's in my town in Olympia. So good morning, Brad. Other folks, Brian, Dave, John. Good morning. Southern California for Drew. Seattle for Terry. Lowell's in Sacramento. Louisiana, South Carolina, Vegas, North Nevada in an RV. Well, that sounds cool. Springfield, Mass. Kennewick, Washington. Probably not raining, or you got a different weather pattern than we got here. We got Dean from Vancouver. Snowy NH, is that New Hampshire? Still? Yeah, Brian, rain in the Pacific Northwest. Who would have known, right? Menifee, California. Spain. Oliverio's calling in from Spain. Tom from Ecuador. Man. Norway. Trond is calling in from Norway. Wow, that's a great distribution. We got people from all over the world. LA. Very cool. Okay, well, like I said, folks are still logging in. I want to give them time before we just kick off. We'll give it just another minute. This is a pretty informal session. This is what I do typically on Saturday mornings, is spend some time looking for trades for the upcoming week. And I thought, well, I'll just invite you to join along and let's see if we can find some good trades. I'll cover some brief material just to explain kind of the process I use, but we're going to spend the bulk of the time looking for trades. Rain finally stopped in PA for Matt. Missoula, Robert's in Missoula. I love Missoula. I ride my motorcycle through there just about every year. I just enjoy it. I could live in Montana. Okay, it looks like the logins are slowing down, so the folks who are at least going to be here at the beginning are here. Everybody that's important is here, right? Long Island. Wow. Okay, so I'm Dean Jenkins, founder of FollowMeTrades.com, and what we're going to do in this session is scan for some great trades. Some trades for the upcoming week. See if we can find some really good candidates. So I'll explain really briefly my process that I walk through and what I'm looking for, right? Because there's thousands of stock symbols, ETFs out there. How do you go find good ones? So I'll explain how I go through and narrow that down just a little bit. And I am going to be identifying, hopefully, some great trade ideas, and I'll give my opinion on those. And there'll be a time, I'll be happy to look at any symbols you're looking at too a little bit later. But, quick disclaimer, I'm a trader. I'm not a financial advisor. I don't know your individual circumstances, what's appropriate for you, your skill level, tolerance for risk, anything. So everything I'm presenting is for education, information purposes. I'm offering my opinion. I'll tell you what I'm going to do. But whether anybody, any trade that anybody takes, an investment that anybody makes, solely their decision, and they assume the risk for that. And trading, of course, and investing always carries risk. Hey, good morning, Evan. So here's what I'm going to do. Here's the process I follow pretty much every week. And that's first, I just do a big picture review. I look at the indexes. I look at the major commodities. I look at the planned economic reports coming up, and just, kind of step back, what's going on in the environment that might affect the market and price. And then I create a thesis. I do a big picture review, and I also drill down and start looking at some individual sectors. And I like to do what I call create a thesis of, a thesis statement is, the beginning of a dissertation where you make a statement about what you're going to prove. It's similar to a hypothesis in scientific inquiry where you make a statement and then you have to go prove it. you have to go gather some evidence to see if it's true, to test your hypothesis or to prove your thesis. So I created thesis, and then I go looking for charts that would either prove or disprove this thesis. Typically end up with a really big list of stocks to evaluate, and that's unmanageable, right? We can't analyze hundreds of stocks. So we try to narrow that list down to a very manageable list. Then I start looking for trades. I start scanning through charts and seeing if there's a good setup there. And I've got very specific criteria for a trade setup, both on the chart and then, you know, the overall parameters for the trade. And I'll cover that, right? So then, you know, I scan, man. I just start looking for trades and see if I can find some that work. Hey, Pavlos is here. Pavlos has been a longtime customer, a Greek gentleman, and he says thesis equals Greek. So I think he's right. I think that is a Greek word. But I think it's a good way to approach it, right? So do a big picture review, create a thesis, narrow it down to a manageable list, and then start looking for trades. That's what we're going to do today. So let's do a big picture review here. Hey, people are still logging in. Welcome. And please ask questions as we go. Again, this is informal. We're just looking for some great trades here. Hey, good morning from Vancouver, JD. Nice. Vancouver, BC or Vancouver, Washington? They're both great, but way different. BC. Yeah, BC is beautiful. If you can afford to live there, right? Crazy. Okay, so I'm showing a chart right now of the Dow Industrial, Dow 30. He says, not kind of crazy. It is crazy. Yeah, man, like real estate, cost of living, BC's nuts. Okay, here's the Dow Industrials. And no surprise, you guys are all traders, right? You know what's going on. Let's just look at this on a weekly chart, right? Yeah, newsflash, we've been in a bull market for 8 years since the subprime mortgage meltdown back in 08, 07, you know. So this thing started heading up back in early 09 and really hasn't looked back. This has been an amazing bull run for about 8 years. Okay. A couple things we know historically is that bull markets end, right? And the normal healthy part of that is they correct. If we look at this on a monthly chart, just to set stage a little bit. No, here's a monthly chart. There's the .com correction. There's the subprime mortgage correction, right? Now we've had a long move up, and we're going to get a correction someday, right? That's highly likely. So that the fact, you know, that we're in the mature phase of a bull market that's been going on for a long time, that's an important big picture thing to keep in the back of our minds, isn't it? So I use Dow theory in analyzing charts. I use a variety of things. You can see I've got the Ichimoku cloud indicator on my chart. I've got the applied reality indicators. I've got a nice momentum indicator. It's called the PTF, which is a trend filter. I've got these pyramids, Ichimoku cloud. So those are the indicators I use. I primarily use Elliott wave, and I use these indicators to help me with a wave count and a prediction. Right? I use Fibonacci retracement and extension tools to predict retracement levels and extension levels. Try to keep it simple. And most of all, try to keep it repeatable so I can do it over and over again, right, consistently. So I said I use Dow theory, and one of the things that Dow theory tells us is that, and just a simple portion of Dow theory is that, you know, an uptrend is defined by higher highs, higher lows, higher highs, higher lows, higher highs, and that a downtrend is lower lows, lower highs, lower lows, lower highs, and that a trend changes, right? If we've had higher highs, higher lows, higher highs, higher lows, it changes when we start putting in lower lows, lower highs, lower lows, lower highs, that the trend may be turning. And now there's big ones, there's major higher high, higher lows, and then there's minor ones, right? These are all big moves, higher high, higher low, higher high, higher low. And then there's little minor ones in between. And if you look back at the beginning of 2016, we had a moderate correction, you know, in the context of the big bull run that we're in. It wasn't, you know, it was just noise, right? It was just higher high, higher low. But there was a pretty nice, very tradable move here, right? And you see it was signaled with a lower low, lower high, lower low, lower high, lower lows, right? And the market decline when the Brexit vote came out was very similar. It wasn't as big as that other one, but it gave a little bit of a warning. And I point that out because look what we got right here in current movement on the S&P 500. And I'm going to get my pen out here. We got a nice low, lower high, lower low, and so far lower high. This is on the Dow, and that just means that these previous highs are not being taken out and previous lows are being taken out. So we got a nice little pattern starting there. And now, does this mean that the big one is starting, the big correction to this 8-year bull run? I don't know, but it could be signaling an intermediate pullback, similar to like we saw at the beginning of 2016 or in the summer, right? So this thing could absolutely continue. We're kind of at a key point here. If the Dow reverses from where it's at and puts in another low, that's going to be how many, right? Low, right? 1, 2, that would be 3 lows in a row, and it would probably, if it does that, well, it's going to be below the Ichimoku cloud, and the cloud predicts support levels, support and resistance. And if we penetrate the cloud, that's another clue that maybe we're at least having a short-term trend change. So I'm going to be watching that really close and see, if we do that next week, we're probably going to get, something like that. And that'll be very tradable. And I said I use Fibonacci retracement and extension tools. And what if we were to just get a retracement to the post-election move? What would that look like? So here's the election move, right? From here to here, here to here, right? And so a correction just to that move would take us down into Dow, a midpoint. It's these blue lines is the correction zone. So a midpoint to that would be about 19.5. About 19.5. So that would be a tradable correction, right? We could make a lot of money if we had a high probability of that coming. Okay. Kimberly's asking if I use standard settings for the Ichimoku cloud. I do not. I use proprietary settings. I've done quite a bit of back testing, and I came up with my own settings. Right. I have a Ichimoku cloud course where I teach my entire approach to Ichimoku, and I give those settings. So they're a little bit different than the factory defaults, and they've worked well for me. It's a pretty cheap course. It's on my website. If you go to Follow Me Trade, under products, there's an Ichimoku cloud course. I think the list price is $159 maybe. People have taken it, have been very, very happy. But the purpose of this presentation wasn't to sell my courses. The purpose of this discussion here is to find some great trades. Okay, so we've got kind of a big picture here on Dow. I walked through my thinking that I think there's early evidence of at least a moderate correction beginning. And by the way, the S&P 500 looks exactly the same, right? Looks exactly the same. There it is, low, lower high, new low, lower high so far. If it comes down, we may have a decent little correction on our hands here, and that could be very tradable, very good. So I got that in the back of my mind. I'm doing this big picture review. So I go, major indexes may be ready for at least a small pullback. I like to look at gold. I just look at the gold futures contract, the continuous contract on a daily chart here. And what I see on gold is, let me get my scaling right here on the indicators. You'd think TradeStation could automatically scale stuff when you pull up a new instrument, huh? So here, we traded this move on gold. It had a nice bullish impulsive move up, had a correction right into a Fibonacci retracement zone, and now it looks like high, higher, low. Like it's really got some legs maybe to go up into this target zone, up between 1276 and 1328. So I'm looking for the indexes maybe to correct a little bit. I'm looking for gold maybe to go up. Okay. And we also know that in 2 weeks earnings season kicks off, right? Alcoa reports week after next, I believe, and that kind of kicks off the next round of earnings, and that could be a big deal. The earnings ultimately matter. I'm not a fundamental trader, but earnings are what ultimately drive price of stock. And if there's signs of declining corporate earnings, that could be something that precipitates a move down, right? And starts at least a short-term correction. So I'll be watching earnings as they come out and see how the market reacts to that. Okay, so I got kind of a big picture here. I got, looking for maybe a correction in the indexes, gold heading up. I always look at oil too, but oil right now is a little unclear, isn't it? It's a little difficult to trade. It was in a really narrow channel for most of this year. It broke down out of that channel, but now it's rebounding. And so if you look at this, it's really in a bigger channel, and it's been ugly for since last summer. It's just been ugly and very hard. There's not a clear trend. Yeah, Bianca's asking, do I mind holding a stock as earnings are coming out? I don't. I'd go check the earnings date. I don't want to go into a trade, and the next day or two the earnings are going to come out and maybe some disruption. So I do go check the earnings date before I take a position. But if I'm in it, particularly if I'm in profit and I've already trailed my stop, maybe and taken some profit, I'll stay with it through earnings, right? It's kind of 50-50 whether it's going to go your way or not. And if you're in a bullish pattern on a chart, unless there's really bad news, there's a pretty good chance that the pattern's going to continue. That's why we're in it to begin with. But so I pay attention to it, but I don't avoid it just because, or I don't get out of a position just because earnings coming. I may tighten a stop. I may take some profit, to protect myself a little bit in case there's volatility, but I don't just bail. That was a long answer, huh? Okay, so then what I do is start looking for sectors, right? Now that I've got my kind of my big picture, I'll start looking at sectors. And there's a couple ways to do this. Here is a pretty cool website. This is finviz.com, and it's a heat map of the market, and you can set it. You can do the S&P 500, the whole world, every stock. You can do ETFs, and so I've got ETFs selected on 1 month, and this can draw your attention to the redder it is, the more it's been going down. The greener it is, the more it's been going up. Right? So I just look at, hey, 1 month, what's going on? These are like your leveraged ETFs, right? So of course they're going to be bright colors. But look here, XLF stands out, the financial sector, right? Against the backdrop of a bull market, the financial sector is starting to pull back just a little bit. So that's maybe interesting, and if I think a correction may be coming, that's going to draw my attention, right? So that's a good way just to get some ideas of areas of the market to go look at. There's another view here. This is the Spiders, sectorspider.com, and I got this for 1 month. So just a sector overview, right? And this is a pretty interesting, horizontal bar graph. And if we look at this, there's a couple things that jump out. So the S&P 500 in the last month is up just a fraction of a percent. And then there's some other sectors that are leading the S&P 500, consumer discretionary, and technology. And there's some that are lagging significantly. And look at financials, XLF. So again, if I think there may be a correction coming, that may be an area of the market to go look at, the financial sector, right? And if I want to be long, what if this bull market continues? Because it sure could, right? What would be a good area to be long in? And I like holding a combination of longs and shorts. I don't like to go all one direction because we can't be perfectly right about the market. We don't know when the top's going to be or the bottom's going to be in a trend, right? And since I use a risk management strategy, so my losers are very small and my winners proportionally are much bigger than the losers, right? If the market does take a hard turn and I'm on the wrong side of it with a few trades, I'm not going to get hurt, right? I'll have a loser or two, and then I'll be on the right side with the other ones, and I'll go add to take some more positions that way. So I think it's a good strategy. We never know, right, in advance what the trend's going to do. We have indicators and probability about what it may do, but we're not sure. So it's good to, I take longs and shorts and try to keep a good combination. James is asking, will a recording be sent out? You bet. I'm recording this, and I'll send it out to everybody who registered. Yeah. Okay, so I'm going to look at this financial sector, and I'm going to look at the technology sector, XLK, and I'm going to look at the entire S&P 500. Okay. Now, these are big lists. These are really, really big lists. If we were to look at the S&P 500, again with my thesis that I think there may be a short-term correction beginning. Drew's asking, are there any other sites? I poke around, try and find new stuff all the time, but these are good. These are good, solid sites, right? So the Spider Sector, FinViz, these are good. All right. Hey, Kirk says sound. Are you having audio? I think everything's working. It looks like on my panel everything's working. Everybody hear me okay? Everything good here? Okay, yeah, everybody's good. All right. Good. Okay. So let's start with the S&P 500. I'd like to see if there's some short candidates in the S&P 500. Well, that's 500 stocks, man. I'm not going to go look at 500 charts. That would be really onerous. Now, I said I use Ichimoku Cloud, and Ichimoku Cloud, when price breaks down, right, we've got a bullish move here. When price gets down below the cloud, that can indicate a change in trend, right? So that would be a clue. If I can scan for S&P 500 stocks where the trend is down, which means the fast over slow line has crossed and price is down below the cloud. So that would be a clue, right? I got to cross over the lines and price down below the cloud. Now that's not my only criteria for a trade, but that's a clue that a trend has changed and we may have a bearish trend to trade. So let me, I've got, coincidentally, the entire S&P 500 loaded on my radar screen here. Voila, 500 stocks. It's actually 506 or something, right? So there they are. And I've got the Ichimoku Cloud indicators generated in radar screen for the entire S&P 500. Okay. Now the sorting tools here in radar screen aren't that great. And what I want to do is get narrowed down to a list of trades that I would investigate. And, want to go look at those charts. Looking for trades, analyzing them, there's some shortcuts to get to a manageable list, but at the end of the day, it's still hard work. Right? You still got to do work and look at charts. Right? There's no panel that's just going to call out phenomenal trades. I think you have to, put on a little bit of time on the charts. But let's get down to a manageable list. I like using Excel for that. So the cool thing here in radar screen is you can select all this data, all 500 rows, pop it over to Excel. And now I've got some great sorting, filtering tools. I can build some additional formulas and logic. So what I've done is taken that entire S&P 500 list, put the data on there, and then I put in some logic statements. So if the Ichimoku Cloud, if we got a crossover up, fast is crossed over slow, then that's an uptrend. And if it's up above the cloud, then that's a bull signal, right? Those two things happening is bullish. If the trend is down and it's below the cloud, that's a bearish signal. and then I've calculated the price. You know, what distance is the closing price of the last price bar? How far away is it from the edge of the cloud? Because I want to catch these trends early, right? So I want it to be pretty close to the cloud and have this signal. So what I can do now that I got my formulas in there is I can filter this. I can sort this based on, I'm looking S&P 500, I'm looking for bearish signals, and I think this is right. Oops, I think I sorted that wrong. Sort, bear, come on. There we go. And now I'm going to add a criteria. I'm going to add a level, and I'm going to sort on that percent above or below, and I'm going to go smallest to largest. I want the ones that are just breaking out of the cloud. Okay. Now I've got kind of a priority list. So I've got, you know, quite a few trades symbols here that are, you know, look how many are giving bullish signals, bearish signals, sorry, 137. But I can prioritize it by the ones that are absolutely closest to the cloud, maybe new new bearish trends forming. So Mike is asking, is my S&P 500 scan table generated every day automatically? Nope. I have to go grab the data off that radar screen anytime I want to do this and populate it into Excel. I don't have any kind of magical link to make that happen. But it just takes a few seconds. Like I said, you can grab these rows, copy and paste. So it's not too bad. Can I show you how to do that? Sure. Real quick. S&P 500, file, new. So go to here, right? Here's my data. I just copy those rows. Let's just grab 25 rows. Copy. Go to my blank and paste. Voila. And then I got to put my header labels and formulas in. There we go. Okay. Hey, you're welcome. Hope I'm not losing my internet connection here. I just got a warning that the TradeStation lost its connection. Okay, it's back. It's back. So here I got my spreadsheet. This is cool, right? S&P 500. I've got a prioritized list, so I can start looking, and I've got a priority order to start scanning through these trades. So let's, before we start looking at charts, let me tell you a little bit of what I'm looking for on a chart. Okay. So I'm not going to make this a course on chart analysis. I do teach a master traders course, but it takes about 6 weeks to, you know, have people go through and really understand and be able to repeat what I'm doing and, you know, build their own method off of that. I'm looking for 3 basic trade setups. There's really only 3 that I trade. All right, I use Elliott Wave. I talked about that. All right, so if I'm gonna show you an Elliott Wave chart. I use you know, some people don't like Elliott Wave or whatever. I use a really simple version of it. Really simple version of it. Very repeatable. People that I've taught are able to do it very consistently. So here's the basic structure of an Elliott 5-wave move, right? You know, wave 1 and 2 start the trend. Wave 3 is the big impulsive move. Wave 4 is a correction to this big impulsive move. And wave 5 is a continuation of this big. So we got an impulsive move, a corrective move, and a continuation. Okay. So these are the 3 things I try to trade. An initial impulsive move we can catch maybe coming out of a channel, a correction to that impulsive move, or a continuation. After the impulsive move and the corrective move have happened, I'm looking for the next leg up. So there's only 3 setups. wave 3, wave 4, wave 5. That's all I'm looking for, right? And if it's not there, it's not there. One of the mistakes I think people make about in using Elliott wave is they'll stare at a chart and go, I'm just having all kinds of trouble getting a wave count. Well, it's probably because there isn't one. It's not there on every chart. What's cool is when you do have a recognizable pattern, then the next moves, if you got a wave 3 and then there's evidence of wave 4 starting, wave 4 is pretty probable. If you got a wave 3 and 4 completed into a Fibonacci retracement zone, and then there's evidence of it turning and heading back up, the probability of wave 5 happening is pretty high. So Chris, so the highest probability trade is a wave 5 trade. That is the highest probability trade in terms of Elliott wave. And the reason is he had all this history where the stock chart was following a pretty recognizable pattern and a well-defined set of rules in terms of what the impulsive wave does, how much it retraced to, all that kind of stuff. So that's a high probability trade. Sometimes all we have is corrective moves. So we trade those and those are okay. You know, catching impulsive moves, you know, early is awesome if you can do it. We've done it a few times. We've done it a lot of times over the years, but a couple times lately. But they're a little more tricky, right? Not every move coming out of a channel is going to do this, but when they do, it's phenomenal. Okay, so those are the 3 setups I'm looking for. A new impulsive wave, a correction, or a continuation. And then I also am looking for a high risk to reward to risk ratio rather. I want there to be more potential for profit on the trade than there is loss. For every trade I take, I'm going to have an entry price, a stop price, and a target price. And I'm going to measure the reward to risk ratio and make sure it's big, right? I don't want to have a potential to lose more than I'm going to make if the scenario I lay out on the chart doesn't work. Right? And then I use a very strict risk management formula. So I look for the pattern to be there. I look for a good reward to risk ratio on it. And then I scan the news real quick, make sure there's no big, you know, they're not in receivership, Chapter 11, earnings aren't coming out the day after I take my trade, something like that. So let's look at some charts. Enough PowerPoint. We're traders. We're not marketers or whatever. Right? Look at some charts. I wanted to lay out what we're looking for before we just start doing it. Got a couple people interested in symbols. We'll get to those in just a minute. Mike. Pavlos on radar screen, you got a limit of 250. I don't know. You might want to call them, see what the deal is. I put 500 on there all the time. Works just fine. I don't know if it's a setting or an account limit or something like that. Okay, so let's just walk through maybe the first 10 of these that we filtered down to on the S&P 500. Okay, let's start with BMC. Now we just start looking at charts. Right? Finally. Remember, we're looking for a bullish or bearish setup, and I'm interested in a new trend, a correction to the big trend, or a continuation of the big trend. All right. When I look at this chart, what this looks like is we already had wave 5 or 3, 4, 5, and now we've got this ABC correction, and this could be a new trend. So this is bearish, right? It is bearish. We see that it's under the cloud. We've got negative momentum. We've got lower lows, lower highs, lower lows. But in terms of a wave count, it's not the one I'm looking for, right? The 5-wave sequence has already played out. This is probably an ABC at the end, and so, nah, don't like it. It's okay. That was fast. One of the things I teach in my courses is how to analyze a chart really fast and figure out if there's any reason to analyze a chart, or you just want to move on. This is interesting. Kinder Morgan. So there's the big impulsive move, It looked like it was going to correct, and now it's been stuck in a long channel. That may actually have been the correction. It took a long time. This one's worth analyzing. This one's worth analyzing. So what I do is I look at my Fibonacci retracement levels, and I want to find out if this move up, remember, here's the impulsive move down. Did this impulsive move up make it into the retracement zone? It actually did, close enough. So this actually looks like a decent trade. If it breaks out of this channel to the downside, now we're going to measure, we're going to put some Fibonacci extension levels and try to figure out where the next move would go. And you can see it's already so low price that some of the projection is negative. Well, it's not going negative, right? In fact, when you see a chart like this that's this low price and this close to zero, you have to suspect these target zones a little bit. And you may have to use this previous low as a target, right? To say, yeah, it may go down to that previous low, but maybe no farther. And so now we look at price movement and the pattern and see if we have evidence of this next move beginning. We do have lower lows, lower highs, lower lows, lower highs. Got a little pop here. It's still under the cloud. The momentum is still negative. So this looks like a bearish trend starting. But it's not super. It's not super. So I'm going to see if there's better ones out there, right? Before I would take this trade, I would want to see it take out this low right here, put in a new low. Then my stop would be something like this, above the cloud. And my target zone would be right above that previous low, see if it's going to find support. Now the reward to risk on this is big, right? This is the risk defined between these two lines, your entry and your stop, and the reward is between the entry and the target. So if it went down to 12 bucks from 24, that's not a bad return. It's not a bad return. If we do have growing momentum here, you know, the more I look at this, actually, the more I like it a little bit. I only look at different time frames. So this approach works on any time frame, Bianca. I look at different time frames. You know, I look lower if I want faster trades. Today I'm focused on daily charts. These are a little bit longer term trades. If I'm having trouble confirming the pattern on say a daily chart, I can go look at weekly. Or if I'm having trouble confirming a pattern on a 60-minute chart, I can go up to daily. So I do look occasionally. But what I've learned over time is if I am having trouble identifying the pattern and I need to look at a different time frame to confirm it, it's probably not that good. The very best trades, the patterns are clearly evident on the time frame I'm trying to trade. Okay, so if this one were to put in a new low, I actually would kind of like it. It's not a bad trade. So Kinder Morgan short. And I like to color code my charts. So when I pull it back up, I can see exactly what I was thinking and what I was looking at. So I make my entry line that cyan, light blue color. I make my stop red. I just bold them up a little bit, and then I make my target green. Green's good, right? That's where the profit is, at the target. There. So there we found a trade, right? It's not ready yet. This one will be ready if it hits 2063. That's where I would take it. So I thought I would just keep track of trades we identified today. And I'll send that out. Daily. Symbol is KMI. This is short. Entry is 2063. Stop is 2246. And the target's 1210. It's got a 4.7 to 1 reward to risk ratio. This is not triggered. And it's wave 5 continuation. That's not bad. That first one we looked at. Yeah, John, what I can do now is go put this on radar screen and put an alert at that price. Right? Go put that on radar screen. You know, I could use this chart right here. I'm not going to leave this running because it's got 500 symbols on it. It kind of consumes system resources. But I could take that symbol, go find it, you know, and over here in TradeStation, right? I can go on last price and set an alert, right? Set the high price or the low price, and then I've got this configured. It's pretty cool, where it gets a pop-up on the screen, but it also sends me a text message to my phone, which is pretty sweet. I like that. Joseph says it could be an iron condor. You know, I trade options extensively, but I don't trade the winged creatures. I go straight directional trades, right? On that one, I would just go buy the puts. I got a very specific method for identifying the contract and managing it, but I just buy the puts. All right. That was one trade. Let's go look for another. 500. Here we go. KMI. That was the second chart we looked at. CVS. Let's go look at CVS. That's a pretty mature downtrend, isn't it? It's been heading down for quite some time. I think that's a little too late to get in. It's starting to lose momentum. So that took me about 5 seconds to figure out that I wasn't interested in CVS. That. You analyze a trend, you got to know where it started. That had a nice downtrend, but it retraced way too high. So that's not what we're looking for. EOG. Now EOG, that looks like a wave. That's an impulsive move up. This is the correction. The problem is it may already be too close. There may not be enough profit left. Yeah, the target zone's down here and it's already too close. By the time we set a stop, right, it's going to have more risk than reward. So it's got a nice bearish pattern, but it's too late. GE is the next one. We'll do 10 from this list and we'll go to another list. GE does look bearish. It's kind of messy though. I don't like it. There's better ones. CINF. It's too bad. I shorted GE a couple years ago and did really well. This is nice. This is what I'm looking for. Big impulsive move that really hasn't corrected all the way yet, and there's pretty clear signs that it's trying to get going. Right? It had a little false start here. This is pretty nice. This is what we're looking for. And I'm just going to measure the retracement, and now it already came really close, so it was worth analyzing, but Cincinnati Financial, never heard of them. I'm not in Ohio. Here's the problem. Here's where my stop would be, right above that. Here's my entry. I really want to see it take out this low and continue down. And my target's going to be at the top of this retracement zone. See how this space is smaller than this space? It's got more risk than reward. So that was worth analyzing. But whether it was worth it. Glenn saying no volume. I think everybody else is fine, Glenn. We've checked it a couple times. Yeah. Yeah, I would want to see it take out this low right here, Chris. This point right here, right? We got a low, lower high. Let's see it go lower than this price bar right here. Okay. But again, I don't like this one because I don't think there's enough profit in it. CA. Steve wants to know how I determine my protective stop on CINF. So I put it here. That's the last high. These pyramids do a great job. These are from traderscoach.com. It's called the Applied Reality Trading System. But even without the pyramids, we can see really clearly, right? Low, lower high, new low, right? That's the last resistance level, right? If price goes above that, this whole thesis about a downtrend is over, right? It's not putting in lower low, lower highs. A downtrend is lower lows, lower highs, lower lows, lower highs. If it goes above that, that's a new high. Downtrend over, right? So that's a great place for a stop. We want to get out when the thesis for the trade breaks down. I know a lot of people place stops based on percent price move or percent loss on the trade. I think you need to place stops based on the reality of price movement on a chart and then size your position from these levels. So I use a formula. I got to stop, I got to entry, right? I use a 2% risk rule. 2% of the account, $100,000 account is $2,000. You divide the loss per share into 2,000, tells you how many shares to buy, or short in this case. That was a really fast move through that. Yes, absolutely move to stop. Once the trade starts, we start trailing our stop down to new resistance areas. Let's think about a trade we're in right now. We were in MO, just to illustrate this. This was a great trade, by the way. So we got long on MO at $67. Our initial stop was down here at this previous low, and we trailed it up, you know, boom, up to these previous, we trailed it all the way up. Our last stop was here at 75.94, and when the trend changed, right, because we trailed it up here, right, when the trend changed, we got stopped out. We were with the trend the whole way. So yeah, we definitely trail our stops with it, and we took profit along the way. We scale out in thirds as it crosses key levels. Take a third of profit here, take another third here, keep the final third on and let it get stopped out as you trail your stop up. We made a really nice profit on this. And you can see this is a wave five, right? 3, 4, 5. We saw 5 forming, caught it. It was awesome. Rebecca, no, don't use, I occasionally will use the cloud as a stop, right? But I rather would use actual price points for definitive support resistance levels. Yeah. This is, you know, this is wall wave 3. Wave 3 is just a dramatic impulsive price move. When we see a big strong trend, that's wave 3. When a big strong trend corrects, right, we look for it to correct into a Fibonacci retracement zone, and this one did perfectly. It's these blue lines. This is a Fibonacci correction, 38.2 to 61.8, and we want to see evidence of the next impulsive move beginning, right? It failed, it pulled back, but then it took off, right? High, higher low, new highs. That's where we got in, okay? That's where we got in, put our stop at the previous low, trailed it up through the trade. Yeah, no problem. I forget the exact levels. As we crossed a key Fibonacci level, and then when we reverse up into profit, is when we take profit. Of course, we're trailing our stop the whole time. But that was a super winner. Let's keep looking for some trades, right? Kind of lost track on where we were. Yeah, that was. It was really, really nice. Here's another one. So fun looking at. This is where we were trying to catch a new trend. I said catching impulsive moves, the initial wave 3 can be hard, right? This is when we caught it on CGIX, small cap, you know, biotech. We got long on this at 266, had a target of $5. It hit the target. So we've taken some profit. We're trailing our stop. We're going to stay with this one and see if this trend now continues back up. But, you know, 266 to $5. And that was pretty fast, right? That happened in about a week. That was super fun. We're still in it. Still in 2/3 of the position. Took profit up here. 1/3 profit. Okay, where were we in our scanning? Totally. These are all great questions. I enjoy answering and talking to them, but let's march through an agenda here too. CA. We're looking for new trades, not glory days. CA, this actually looks bullish. We're scanning for bearish. This actually is a wave 3 up, a 4 down, probably going to get a 5 up pretty soon. Yep, retraced right into there. Now it's under the cloud, so we don't have evidence for a long trade yet, but there may be one coming. You can see it trying to start high, higher, low, got a reversal. Maybe it's heading up. It'd have to get above the cloud, take out previous highs. So not looking for longs. MAT, Mattel. We shorted Mattel back at Christmas. Felt like a Grinch shorting a toy company. All right. And it didn't work out. It got really volatile. So we got short here, and it spiked up. But now look at it. Doggone things down. Pretty bearish looking chart. Yeah, now it's still got some room down to the target. The big move is over. The big move is over. And it's kind of a 1-to-1 by the time we put a stop in here, so not great, not great. Okay, so on the S&P 500 bearish thing, we looked at 10 charts. We found one. We found one chart, one trade that actually looked pretty reasonable, and that was KMI short. And again, I'm going to publish the spreadsheet. So let's look at some other theses. Okay. We said S&P 500 financial short. Let's go look at long, technology long, XLK. Right? We're not doomsayers. We'll go long as well. So I did the same thing. I did all the steps. So you don't have to sit here and watch me play with Excel, right? But I've got here, I've got the entire XLK, which is a technology ETF, loaded up. About how many? 72.3 symbols. Okay, got them over here on a spreadsheet. Now I can just play with this. We're going to do this. We're looking for long trades. So bullish signals, largest to smallest, at a level, want them close to the cloud, there. Okay. So here's a list, and we'll go look at. Let's start with 10. We'll go through these really fast. I'm not going to spend the time like we did before. Let's just see if we can find some trades here. Right? That's the goal, right? Yahoo. Not even going to look at Yahoo because I said I'm looking. I do scan and go, hey, are they in receivership? Is there a pending acquisition that's about to close? You know, or are they going to announce earnings in a couple hours, right? And I don't want to jump into stuff. We know Yahoo is being purchased by Verizon, and you know that deal is all but done. So I'm not going to go buy that. HPE. Hewlett Packard. So interesting. This looks like a bear trend begging to start. You can see increasing. You can see increasing momentum in the negative portion of this oscillator. Big gap down, Brian says. Yeah, here, yeah. Okay, so it's above the cloud. This trade is not ready, but it's super enticing, right? So where would this go to? This is what we call generating a watch list, right? And most of the really good trades, it's pretty rare to just come apart a chart, right? You go, wow, that's perfect right now, and it's the best entry day ever, right? But if you find a good setup, typically it's like, yeah, we kind of missed the entry on that, right? So what we do is we generate a watch list and wait for these things to qualify, and then we can get in them pretty early. So HP needs to get below this previous low right here to prove that the downtrend is starting. We do have a nice low, lower high. If it puts in a new low below here, it's going to be a nice confirmation. We would use this high, if this is the last high, as the stop, and then we're going to use this as the target, just inside this retracement line. And as we just visually look at that trade, we can see there's a bit of a problem, right? There's a bit of a problem with this trade, unfortunately. And that is they're about equal. The risk to reward's about 1 to 1. Not okay, right? I need my winners to be bigger than my losers. That pushes my overall profitability and trading stats farther into the green, right? It's not a good idea to take 1 to 1 trades. So unfortunately, it's a pretty nice pattern, but by the time it qualified, it would not meet my criteria. We're going to skip Yahoo. Let's go look at NVIDIA. Same story. Great bullish move up. Looks like it's going to start to move down, but by the time we get there, the profit is going to be bigger than the risk. That's a bummer. Bianca says she lost the audio. Anybody else? I see the little green meter going crazy here. It's back. Okay. All good. Yeah, there's 3,000 miles of internet between us, Bianca. You're out on the East Coast, right? Not surprising we'd have a little drop now and then, unfortunately. JD wants to know what the minimum risk to reward ratio is for me. 1.2. 1.2 is my minimum reward to risk. And at that, it's got to have a very high probability, right? I prefer it to be over 2 to 1. Bill says the internet's laid back on Saturday. Yeah. Okay, Microsoft. It will correct someday, but it's not there yet, right? Oh, we were looking for bullish trades. That's why I was going, how come it's above the cloud? We're looking for bullish trades. Okay, too late. Too late here on Microsoft, APH. Remember what I'm doing. Looking for bullish trades. Too late. Nice mature trend, hasn't corrected, no continuation. I don't chase trends. CTSH. That is a gappy chart, isn't it? It's a messy chart. I said earlier, if you're listening, you know, one of the mistakes people make with Elliott wave is trying to stare a pattern onto a chart and do a wave count when there aren't any. There aren't any. It's a mess. SWKS. A couple of the folks who've been through my training, they were already typing that in. Messy chart, jittery, get away from it. Run! Okay, Skyworks. Let's go bigger here. So this had a big impulsive move back here. I think that correction was too big. Yeah, it's not good. PayPal. That's another messy chart. I'm less and less enchanted with PayPal as time goes on, too, just as a provider of services. Texas Instruments. Beautiful trend, too late. And not surprising, right? We're at the end of a, we've been in a bull run for 8 years. Not surprising that bullish trades would so many of them we would look at would be too late. Too late. This actually had 3, 4. This is 5, but it's near the target. I I can just see it. Facebook. Facebook is inching, so this is a nice, it did have a correction, right? So some of the other ones I was looking at, they haven't had a correction yet. Facebook did. It was small, it was on the edge of what's acceptable, but now it's in wave 5. So there's a target zone for Facebook up at 151. Okay, target zone at 151. You're getting pretty close. The stop, there hasn't been any real, that pullback wasn't enough to put a stop up there. So the stop's right here at 132. So it's bigger distance from the stop to the entry than the entry to the target. Target's this green line. So nice trend. It'll probably continue, but it's too late. Entry was back here at this blue line. That was the time to get into Facebook. Mike, do I do this every week for the members? What we do, I don't do this in-depth scanning for trades every week, but for so in every morning, Thursday mornings, we have a live trading room where we spend an hour and a half analyzing the markets and looking for trades in the live trading room. And then I have two main subscription products, live trading room, where an hour and a half every morning we do similar to this, look for trades, analyze the market. And then I have a stock pick subscription service where I send you the best trades that I've found and that I'm going to take with my own money. And I do take them with my own money. And then on Wednesday evenings for the stock picks, we have a review where we go through the trades, right? I explain why, what we're doing, how we're managing it, how we're moving it, and answer questions and look at any trades you're interested in as well. I'll pop those links up if you guys are interested real quick. Just take a brief commercial break. So if you're interested in the live trading room, here it is. Everybody attending here, you can get a discount. List price $79 a month. You can get it for $39. Again, we're in there in the mornings for an hour and a half, and looking for trades, analyzing the market, doing a little education. So I just posted the link in the chat area of GoToWebinar for the live trading room, and then for the stock picks, if that's kind of your thing, you can get a discount. You can try this for 30 days for $39, money back guarantee. Not your thing, 100% refund. And then you can get it for $97 a month, which is a discount from the list off the homepage. And so that link is posted as well. Right, so if you're interested in either the trading room or the stock picks or both, try it out. Both of them money back guarantee. I just want happy customers. I'm not interested in grabbing people's money. I want long-term relationships, happy customers. So try it for the first month. If it's not your thing, you just send me a note, give me a call. No questions asked, no hard feelings. Get a refund. It's how I've always operated. How did I load the ETF XL file, the ETF XLE into TradeStation? Yeah, I'll show you that, Scott, real quick. I'll show you that. I definitely want to at least find one or two more trades for you guys, right? So I love answering questions and stuff, but I want to also press that agenda of scanning for some trades. So what I did, it's kind of a multi-step thing. It's a hassle, but so here's this awesome sector thing, right? I think it was XLF you were asking about. Yeah. It doesn't matter. I also loaded XLK and XLF, right? So this is an awesome website. Spiders get this great view. But if you drill down into this, you go, oh, what, they don't give any stupid symbols, right? What's the point of that? So there's a better website over here, which is ETF Investment Outlook, right? They've got all the components of the XLF fund, and you can just select this, right? Copy, paste it over onto Excel, and then just copy the symbols out, and then go paste them into Radar Screen. So it's kind of a multi-step pain in the butt. But once we get them there, we go. Yeah, XLF. Once we get them there, we can do our thing. You're welcome. Yeah. Yeah, a lot of people, watch this and go, oh, that's super awesome, Dean. Glad you're doing that. I think I'll just subscribe to the stock picks and let you do this because I'm doing it for my own trading anyway, right? Some folks just want to draft off that. Let's look at one more. Let's look at, this is XLF. So this is the financial sector. And remember from here, it's kind of leading the S&P down. And if we think the S&P is going to turn, the financial sector may be a great place to go get some trades. So I've got that loaded onto radar screen, and then I ported it over here to Excel, did my thing, did the magic. Now let's sort this and let's look for some bearish trades on the financial sector. Yeah. So bear signal larger. All right. And again, I got this sorted how close it is to the cloud to try and find the ones that are breaking away pretty early, right? We shorted Bank of America week before last. Man, that was a home run. That was a winner, right? It's probably farther down here, down the list below the cloud. It's already started. We want the ones that are just starting down, right? Met, we already looked at that one on another list. So Met, HIG, right? E-Trade. Some of these smaller ones, Berkshire Hathaway. Anybody want to go short? Want to bet against Warren Buffett? I'll do it if the chart's good. Got whole different trading objectives. Met. So a little bit of a messy, gappy chart, but a lot. That actually had its 5 waves down. It's got a new wave. This is a wave 3 up. And yeah, not enough room. So it's worth looking. Not enough room. I think we looked at CINF. It was close, but we didn't like it. HIG. Ooh. The Hartford. Sort of like it. I got that in the wrong place. We're looking for a corrective move down into this target zone. Trouble is our stop would be clear up here. If it puts in a new low, we could put our stop here. It's still going to be 1-to-1. It's not. It's a pretty bearish pattern, but it's not. Doesn't meet the parameters. As I mentioned, scanning is hard work, and finding great trades is hard work. This looks just like it. Am I getting bleary-eyed and looking at the same charts over and over? AIG. Tim, I'd skipped your question there. What's my preferred style? So I am a swing or trend trader. I'm looking for impulsive moves or corrective moves to trade on the charts, and I absolutely trade them with options, just directional, go long the calls or long the puts. That's my first choice. Oh, Brian says, well, worth it. Yeah, it's hard work, but it is worth it. AIG. Yep, same story, same old, same old. Berkshire Hathaway. Let's see. Are we bold enough to trade against Warren? Actually, heck yeah. That's actually a really nice bearish setup. JD, I like in the money. I like a high delta. I'm not looking to exercise the contract and take possession of the shares. I want to buy the contract. I want to have the shares go the direction that I expected based on my analysis. I want to sell the contract way before expiration. So in the money, high delta contracts accomplish that the best. You're welcome. You're welcome. Okay, so Berkshire Hathaway is starting a bearish move. I like the momentum shift here in this. What I'm looking for is where would you put your stop, right? I think we could get away with a stop here at this level, right there. That would give us an entry right here. We would take an entry when a new low is put in right here, and that would give us a target just under here. And I think that's going to be 1.3, 1.4. Let's enter this one on the sheet and check it. It's going to be okay. It's not going to be a 2-to-1 or 3-to-1, but it's going to be okay. Oh, wrong color again. That's the stop. This is the entry. We're not betting against Warren Buffett. He could care less if it goes down for a little while. He's a long-term value investor, and it always helps if you can put your guy on the board. So he won't be offended if we go short his deal for the short term here. This is daily. BRK-B. We are short. Entry 165.12. Stop 171.69. Target is 158.65. Really? Did I get that price right? 156. It's covered up. $1.2. So right at the threshold, not triggered. And this is a wait for. Okay. So we found two. So a lot of questions coming in here about the why 165.12. It's we want to see it come down. I could actually refine this a little bit. I was being a little sloppy. What we want to do is put in a new low. I was trying to catch the wick of this right here, this price bar, which is in the cloud a little bit. So let's be precise. The low of that is 165.80. So we're going to go one tick under, 165.79. There. Let's go fix our sheet. We're looking for it to put in a new low. Take out that previous low right there. That's the objective. We said that is 165.79. That's going to push the stats, I think. 1.5. Okay, perfect. Well, we got two trades here. We've been at it an hour and 15 minutes. Boy, just about everybody's hanging with me too. That's awesome. Appreciate that. Appreciate that. Okay. Yeah, I wanted to get you more. We got two trades. They're short. So let me give you a freebie here. One I've already found. This is going to be a trade that is not for everybody. Look at this thing. So this is DRYS, dry ships, right? This thing, unbelievable, right? They did reverse splits. That's why the high price is up in the thousands of dollars. They've been doing reverse splits. But what we see going on down here at the bottom, so this is a bit of a flyer, right? I don't trade these all the time, right? But every once in a while you can catch these and do remarkably well. So we have to magnify this thing just to even see current price movement because of the scale of previous price is so dramatic. It's just ridiculous. Okay, here we are. Finally, we can get down and see price movement on this thing, right? What we see happening at the bottom, right? At the bottom, yeah, dry ships is on the bottom, right? And there's actually been some fundamental shift in the company. I went and looked at that, and that's pretty interesting. So we do have, it looks like a real bottom put in. We got a higher high, higher low, found support. If it does it again, if it goes up, and I got an entry set at 216, right? This thing trades at monstrous volume, 14 million shares on Friday. So it's liquid. You know, I'm very careful on low price, low cap stocks, right? I don't want to get into something that I can't get out of. This thing's got plenty of liquidity. So if it hits 216, we're going to have a stop down here at the bottom at 119, right? And it's got a target of 563, and it's done that before, right? And it could just be people covering their shorts, right? You know, doesn't mean that the company's healthy and whole and everything's good again. It can't just be speculators like us, right? These things can bounce off the bottom, and if it puts in a new high, takes out that one, there's a good chance it could pop up at, you know, up to this previous high. I just got it resistance down below it. You know, that's a double your money kind of trade. So I wouldn't bet the farm. I'm even going to dial back my position. I usually take a 2% risk. I'm going to take a 1% risk. But it can be, you know, if you have a tolerance for risk and enjoy this kind of thing, this may be a fun one to take. And my target, you know, why is it? I've just set my target. Here's this previous high where it couldn't get above, and I've just pulled my target inside that a little bit and viewing that as a potential resistance area. Covered call, I don't do that, Gene. I don't do covered calls, right? I only buy options, and I buy them just a simple direction. You know, I don't know if it's not a bad strategy, right? But again, I think it's going up. I think there's a chance it could pop up. So having covered calls, you don't want it to go up, is how most people play that strategy. It's a very low cost stock, right? So again, this one's outside of my norm, but I think it's a fun one to take a look at for sure. Let me get you one more. So we got two that we uncovered through our hard work earlier. I'm showing you this one just as a freebie. I'll give you another one. Let me pull that up now. My scale's going to be all whacked out because we had to magnify this one. Yeah, I would not try to trade options on dry ships. I would just go buy the shares. It's low cost. So when we walked through the setup earlier, I told you that I was bullish on gold. I think there was a pattern there. So here's a nice way to play gold. This is a trade I'm in. This is a trade to publish to the StockPick subscribers. And this is ABX. I think this is a great instrument to trade gold with. We've got a nice wave 3 up, a perfect correction, and it's really following what gold's doing, right? Higher high, dramatic higher high, higher low, heading back up. So I got in this at 1953. It's down a few ticks. I don't care. Right, my stop's down here. So I think you could get into this today, you know, Monday at the open, actually, at the current closing price, or, you know, wherever it opens Monday, 18.99. You get a better entry than I did. It's got a target up here at 23.91. That's almost a 3-to-1 reward to risk ratio. So there's a trade for you. Right, we uncovered two shorts. We got that, you know, that kind of side bet, right? That higher risk trade on dry ships, and here's a real solid one. This is ABX Barracks Gold. Got a nice entry, and I am trading that with the July $16 strike call. That's the contract I like on that one. This is the July $16 strike call option. Okay. Wow, so we're an hour 20 into this. We had some fun here. We covered a lot of charts, identified some good trades, some good ideas, answered lots of questions, had lots of great comments. Felt like a pretty productive session. Yeah, so once again, I'll pop those links up, right? If you like it, if you like what we got going on here and you'd like to be part of the live trading room, love to have you. We're on for an hour and a half, Monday through Thursdays. Here's the link for that. Boom. And if you'd like to jump in on the stock pick trial, again, $39 for the trial and money back. If you're not happy, not your thing, that's cool. I will give you a 100% refund, no questions asked, no hard feelings. Hey, Terry, you're welcome. Bill, yeah, it's recorded. I'll send this out. Everybody that registered, I will absolutely send out a recording. Oh, we got some symbols. People want to look at, yeah, let's look at some symbols here. So let's do that. I forgot that was part of the deal, huh? First one was Walmart. Man, I've been trying to short Walmart for a while. It just won't, it's got such a bearish pattern here, but it just won't get going. So the current deal on Walmart is it would have to get below the cloud, probably take out this low here to make it a legit short. Still plenty of room down to the target on this, but we need to have it really, really turn down and get going. So not yet. Not yet. Had a couple of J&J. I've shorted J&J in the past and did real well on that. It's a mover. So there's wave 3 up, wave 4 down, wave 5. Looks like it almost hit the target zone. That would be called a win, right? We would have got into this back here. So is it just pulling back and going to make one more run up to the target, or is it over? Can't tell right now. Way too late either way. So I wouldn't do anything with J&J. If I was in it, I would have my stop right about here and get out if it hits it. JD, I send out new picks when I get them. For the long-term stock picks, it's about 1 to 2 picks per week. So I just send an update. I do email and text messaging, and then we meet on Wednesdays at 6 p.m. Pacific time. And then if you can't make that, that's recorded. A recording's posted. And part of the pick service, you can set up a one-on-one consultation with me. We talk on the phone, answer questions, get you off to a really strong start, and of course, email support anytime. Okay, J&J, Adobe, ADBE. Another company I am less than enamored with. I think they lost their mojo. Their customer service is horrible. I'll tell you a story someday about getting screwed by Adobe. But they're in a beautiful trend, and it's too late to get in. It'll correct someday, but it's not showing any signs of it yet. That was the last symbol. Wow, Chris, thanks. Nice. Bill, Tamar, everybody. Hey, okay, we'll go ahead and wrap it up. Very good. I will send out, it takes probably 2-3 hours by the time the video gets encoded, decoded, whatever, uploaded, and then we post it on, I'll post it on YouTube and then send you guys a link to it. And I'll send out the spreadsheet of the charts we identified and those links if you're interested in the trading room or the stock picks. Well, hey, enjoy the rest of your weekend. I hope it's better weather where you're at. It's a little misty here, so didn't miss anything fun outside by being in here in the office. Sure appreciate all of you for showing up here on a Saturday, spending your time here. Thanks for your really, really nice comments. And hey, be careful in your trading. Use risk control. Keep your winners big, your losers small. And we will catch you on the next one. Thanks so much. All right, bye-bye.